Okay, let's talk about the capital goods space and companies that are present in, the energy segment, in the chemical segment, because there's lots happening there. Thermax is one stock that we're looking at right now. Ashish Bhandari, who's the Managing Director and Chief Executive Officer at Thermax, joins in to tell us how the different verticals are doing for them. Ashish, thanks for joining in. Last time when we spoke with you, you had indicated that demand in the energy segment is very strong. In export nations like Southeast Asia, Europe, how are things looking? Because there are clearly some challenges that are staring at us in the face. Would that sort of dampen demand for you in any way?
Hi, Sonia. Anuj, Jen, Prashant, a very good morning to you and to your viewers. To the specific question on international markets and demand, I would say quite the opposite, actually, because with all the uncertainty that is going around, a lot of countries are looking at having bigger control on their energy supply chains, which means products like biomass, waste to energy, a lot of distributed power solutions, a lot of distributed energy solutions come into play. And that's a relative area of strength for Thermax. So our plants in Europe are fuller and actually beyond production capacity right now. The challenge that we have out there is not on demand. It's actually finding people to do the work and managing input costs, energy costs specifically, which are a big part of producing the goods that we produce.
Right, Mr. Bhandari, could you quantify that? There's many countries this on the export side, energy self-sufficiency. Here in India as well, there is a fair bit of optimism around the core industries, old economy sectors, right? Cement, steel, refinery, many other industries where maybe there is going to be a phase of capex which will set in. Could you quantify that with some numbers? What are you starting to see in terms of inquiries, orders coming in the second quarter so far?
Look, I think on the inquiry side, for the past 4 quarters, we've been reaching one high after another. Yeah. Now we have reached some sort of a plateau, but that plateau is not a kind of a recovery back to 2020 or anything like that. Yeah, the plateau we are talking about is at a high relative to what we have done in the past. So we are seeing consistent demand, we are seeing good orders, and those orders are being backfilled by good inquiries so far. And we are seeing that across industries, good infrastructure. And I would say India's infrastructure story is still intact. I may say a different tune 6 months from now, but as I see things right now, our story is intact. Yeah, we're getting good orders and good inquiries. It isn't growing as much as it was maybe 6 months ago, but it has grown a lot relative to even pre-COVID times.
So can you quantify this for us when you say good orders? In Q1, your order book grew about 40% and stood at 2,300 crores. What is it in Q2 so far? I mean, just trying to understand, what would this mean for your business?
We'll show a healthy growth over last year. We haven't had a single big order to talk about, which we would announce specifically to the street. Despite that, we should have a decent quarter on orders and a decent pipeline going forward as well. Given it's the end of the quarter close, I would hesitate to share an actual number, but we're quite happy with on the orders front overall. Not just domestic demand, but even internationally.
So the reason I'm asking is more than 50% of your chemicals business is dependent on exports, right? And over there, the demand scenario seems to be a bit fragile. Would that put a lid on the order wins?
No, actually, see, on the chemical side, the kind of chemicals we provide, our market share is 4%, 5% in the developing markets we are talking about. And US in particular has been an area of focus for us. And so our story is not driven by slowdown in those markets. Our story is entirely driven by market share, our ability to address certain applications, enter those markets. So that story stays intact. I don't think the macro situation affects us as much. On the Europe side, I do think there is a window of opportunity and we should do better. US has been a stronger market for us traditionally for chemicals, and we need to increase our capability in Europe, especially given some of the geopolitical issues that are going on, that's a window of opportunity for companies like Thermax. We should look to do better.
Mr. Bhandari, you said that you said ordering is kind of plateaued. You said, right?
But plateaued at a high. Yeah, you can't be growing 40%. You can be, I guess, but
no, you can't be.
But for the businesses that we are, look, I'm jokes aside though.
Yeah.
We were maybe a 5,000 crore business pre-COVID with 1 or 2 big orders here and there. Last year we breached 9,000+ crore of orders. We had a few big ones, but Q1 and Q2, we are on a good pace without actually any big orders specifically to talk about. So those orders are coming from multi-segment, a lot of our new products and solutions, good growth from services, good growth from build, own, operate, chemicals continuing to build. So I like that kind of growth actually.
Okay.
No, so which means then which means what? Which means you will continue to take in the rate of change in terms of the order inflow. That'll be slower. That's what you're saying.
Rate of no. Actually, I'm saying the growth is now slower, but you are at a high, and that's at a high that you really like because these are profitable orders that you can take it. They're not one-offs. This is consistent business that you can drive, which is also in many ways a view into, as I said, India's infrastructure story, because it shows that multiple industries across the board are looking to invest, are looking for green solutions, are looking for efficiency improvement. Energy is a big driver for many different companies. And when that becomes a topic of discussion, companies like Thermax come into play.
So, last time you had told us about the solar OPEX business, which the benefits of that would show Q3 onwards. You're expanding that business via the acquisition of Jalansar Wind Energy and Kanakal Wind Energy. Can you tell us what exactly are the benefits? What will it bring to the table for you?
No, it'll be still slow. What I said was Q3 onwards, the revenues will start to show up. It will still be very small for this year. Next year, it will start to build up. But by Q3 of this year, we would have effectively close to 75 megawatts on kind of an OPEX basis that we think we would have as part of our portfolio, which is right on plan to what we had expected. So this is what we have sold. By the time we commission these projects, by the time they start to show revenue, this particular set will start producing revenue in Q3, but we won't finish the installation and commissioning of the 75 megawatts until Q1 of next year. Yeah, so the next several months, and I hope the next few years, will continue to be busy on the solar OPEX portion.
Sure.
And the business will only now start to produce revenue, which is not the end, it is the beginning of that story.
Just a quick question then. You've incorporated a subsidiary, Thermax Bioenergy Solutions, as well. Can you tell us what is the potential that you see here?
Quite substantial. I think bioenergy and solutions around bio-CNG are in their infancy in India. Tremendous amount of potential in taking things like rice straw, which we know is a big cause of pollution in the north, converting that into useful forms of energy. CNG in this case, taking municipal solid waste, cow dung, lot of different kinds of what are today waste, and converting that into CNG. So this particular part of the business will provide technology and EPC for these kinds of projects. It's a JV that we have announced. High expectations, and over the next few quarters, you will start to see both good orders and revenue from this business. As we start to show, we'll talk about them, and we'll show a couple of wins in this particular quarter itself.
Mr. Bhandari, just one last point, trying to get some numbers out of you. Between FY17 and FY22, revenue growth for you has been about 6.5%. Margins were about 7.5%. With what you told us, what should we expect? Because the street is factoring in much higher numbers. I mean, revenue growth for the next many years at about compounding at about 15%, margins at about 8-9%. Are those realistic figures?
I don't know about a much longer term, but in the shorter term, I would say, yeah, those are reasonable targets for Thermax. We have a backlog to show. Commodity prices are now somewhat stable. There is no reason to not have those kinds of expectations, and that's what we are performing towards here. There are still too many moving parts, so to call out a quarter by quarter would be unreasonable, but longer term, that's what we are focused at.
Okay,
Yeah.
15% revenue growth, top line growth. Thank you very much, Mr. Bhandari. Appreciate you joining in and taking us through all of that. Appreciate it. Well, the market is back.